Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 9th, 2012. Let's talk about. So let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. All right, as discussed in the previous video, we did have again for a Monday very low volume. The volume was about a very depressing 100 million shares traded today, to be exact, 103 million shares to be traded. Our average is 150 million, and that's why we had a sell-off during the day, and then towards the end of the day we had a buy-in where the institutions spend money to prop the markets higher. So our total loss for today on the SPY is a total of 17 cents, which is really not bad at all. We did create a doji candle, and again we are on low volume, and then the day before that we had low volume as well. So do I think this move is justified? No, I do not. Okay, so but a couple of things that we're going to have to take a look at. First thing we're going to look at is these two mathematically calculated levels here, which is the gray and this gray and this pink line here. One is percentage and one is number based, and I'm working on a piece of software to help me do this a little easier. And if I get numbers that are close together, then you can pretty much bet that this is going to be at least good for an intraday support line. All right, we also have these two moving averages here and this trend line here. As you can see, this trend line coming down from let's see if I can scroll back here from this pivot point to this pivot point here, and then now we have another one here. So what we have is these two mathematically calculated levels, this trend line, this downward movement trend line, plus this two moving averages here. Okay, so one thing to keep in mind is we have this moving upper trend, this bottom trend line here connecting to these two lows. So there is a possibility that we could reach this trend line before bouncing higher. However, it does look like that the support, there's going to be pretty significant support around this area, right around here. So if we get into this area tomorrow, then I do expect a bounce. Couple of things that I want to remind you again: the volume is low, so this down move is not justified. Okay, so a couple of things that I can see happening. We come down into these two moving averages here. And then we create another doji candle of sorts, and then I expect upside movement the day after. Okay, or we come down, and what we're simply doing is consolidating, and the longer we consolidate, the more power we have to break through all these levels here, and then we'll have a lot of technical damage, and that's definitely a possibility. Right now we have to take it day by day. Right now I see two doji candles. It really actually I see well, to be honest, three doji candles, but the doji candles aren't on volume, so I do not consider them reversal patterns as far as the candle charts go. Okay, all I see is that this is a sell-off of people taking profits. I mean, the volume is just way too low to justify this down move right here for now. Okay, so we may have a little bit more downside to come tomorrow into this 133.99 level, and then I expect at least an intraday bounce on that, and that's provided we don't get any really bad news coming out of Europe or anything like that. Okay, so as the news has seemed like it has subsided a little bit, and as long as that stays true, then we should hopefully see a sell-off in the 133.99 and then a bounce. We could, however, possibly already get a bounce to the upside. What is that, negating this support area here, and we may just pop up tomorrow. And again, this is just like playing chess. I mean, we have to be prepared for every move that it makes. Okay, so we've already tested this 137.09. So if we do pop or start to pop, I would expect the next resistance point to be at this 138.95, which also coincides with this upper trend line up here before getting another sell-off. Now let's look at the bigger picture here. Let's take a look at the weekly. Right, the weekly chart simply shows, let me just delete this line here. We have this down move, right, and then we have these two trend lines coming up here. Okay, now don't look at any of these mathematically calculated levels. It's just a simple pattern here. What is this pattern? This is obviously a bearish flag pattern on the weekly. So longer term, this still looks bearish to me until we can close above or make a new high. So we have a high here, and we have a lower high here. Okay, so we have a high here, a lower high here. Until we can make negate this lower high and make a higher high, then this looks like it's still bearishly it's still a bearish pattern. Okay. Again, switching back to the daily, we have this down move, and then obviously we have this upper I guess you could call it a wedge or an ascending triangle of sorts. And if we get into this 138.95 level, I think it'll be its last leg, and that's if we get a bounce off this 133.99. Now if we break through and we close below this bottom trend line and confirm, again we're gonna get some support on this 200 moving average, but then it's going to be minor support, and then from there I expect a sell off all the way down here. So in essence, we are still in a downtrend in the longer term. There's nothing telling me that the trend has changed yet. So pretty much you can, in my opinion, I would probably short any bounce that we get. So basically, if we get a bounce off of this 133.99, we get considerably. If we get into this 137.09 level once again, then I may actually consider taking a short. That would create a lower low. But if it breaks to this 137.09, because again, any level that's used and abused, I cannot trust that level already. And we already used up this 137.09 the first time. The second time around, I can't trust the level. So I may take a short at the 137.09, and then let it ride up to the 138.95, just so I don't miss the train in case it does reverse down from here before breaking down out of this rising wedge here. Or what I'll probably do is short when it hits this 137.09, and then when it hits this 138.95, take another short. Okay. And then my stop would be any close above this upper trend line here. That's telling me that the pattern has been negated, and we'll probably see more upside. Again, nothing was 100% in the stock market. It's a very humbling, I would say not really a game, but it's a very humbling career, or a humbling job, I guess you could call it. Nothing's 100% guaranteed. All you're doing with technical analysis is putting the odds in your favor, reading the general public's or the general traders' human emotions, and human emotions will never change, and that's why patterns and candle charts and trend lines and all that will always work. Okay, so in any case, let's move on. Alright, this is a chart of the UUP, which is the US dollar. Okay, I also have a percentage calculation here, which is 22.45. You notice these are just single calculations here. It's not doubled up like we see in other charts. So it should still hold, but it may not hold as strong. Okay, so in any case, we will have some resistance at this level here, which is a double top. In fact, let me just draw a line right here. We came pretty close to it. Sometimes when it gets close to it and it bounces off, then that's pretty much considered used. However, in my opinion, if we break above this upper trend line, this double top pattern here on high volume, say if we break through it with volumes such as this here, volume substantial like this one here, then I think the dollar is going to go much higher. And how high? Let me show you. This is a chart of the DX, which is also the US dollar, but I also have mathematically calculated levels here. And the next level I have in store of the dollar, if it can break above this this double top here, as you can see, it actually reached the double top on a DX US dollar. So if it can break above here on substantial volume, volume like this over here, then I do expect a run to the 85.23 level. Okay. And again, dollar up, markets down, and vice versa. It's not dollar for dollar, but it's definitely tick by tick. So when you see the dollar tick up, and the markets will tick down, but the prices may be different. Okay. This is daily chart of Walmart. I was looking at some forums, and I saw a lot of people shorting Walmart as of today. I was tempted to pull the trigger on a short on Walmart, but last time I did that and I didn't follow my rules, I got burned. And again, the reason why we don't see any pink lines on the Walmart is because the percentage calculations, the price is way too high already on Walmart based on a previous pattern that Walmart had, which means, in my opinion, Walmart's just way overextended. The run is way too high, but you're gonna have to consider this, and this is something that I've been saying in every single video. You do not want to short a strong stock. You want to short weak stocks, and you want to go long strong stocks. Okay, and this is a perfect example. I mean, even though the SPY is down 17 cents, I mean Walmart was up 40 cents. I mean, this thing is a beast. I've been saying it before, and I'll say it again. You have to be very careful, and when you short strong stocks like this. So I mean, it's pretty close to the 72.22 level. I mean, it's just about $1 more, even less than $1 more. I may consider shorting this at maybe 72.90, 92 or so. If it reaches this upper trend line here, then I may take a short. I do expect it to possibly break through the 72.22 level. Again, I do not want to take the chance. It may pull back already tomorrow. I mean, that's fine. Again, you want to keep your risks low. So shorting a strong stock, you have to be very careful. And if you missed a short on a strong stock, then it's not a big deal. I think, in my opinion, that if you miss that trade, at least you're not losing money, because I know a lot of people that shorted Walmart around this area over here, thinking that it was going to come down because it was overextended, and it just consolidated bullishly here, and then it just broke higher. I mean, and a lot of people lost money and got burned off that Walmart trade. So you just have to be careful about strong stocks. Speaking of strong stocks, let's take a look at Apple. Apple here is another strong stock. Remember, I had this level of 612.34. That level held the day before yesterday, or what is today? Actually, today's Monday. So that level held on Thursday, and then on Friday we had a pullback. So this level is actually used up already. Again, once a level is already tested, the second test to me is invalid, and I don't trust the level anymore. That's how I play with these mathematical calculations. Also, you notice Apple doesn't have two levels that are fairly close together. They're kind of spread apart as far as the percentages and hard numbers. If we extend this upper trend line here, we can still consider this. Within the trend line. The only problem I have is that the close is just barely above the trend line there. So unless to validate this move, oops. All right, to validate this move or this close above, I'm gonna have to see another day that closes above this candle here, and then we'll definitely see at least some resistance around this level over here. But if we close above that level there, then I'm thinking this 657.42 level would probably get tagged. Again, Apple does have earnings on the 24th of this month, so Apple may ride up into earnings. Sometimes it sells off before earnings, and then you have a blast off during earnings. And then there's also rumors about a 7-inch iPad coming out, or whatever the case may be. And it's Apple is just one of those strong stocks that are hard to short. I mean, a lot of guys that shorted Apple, get burned. I actually took a short on Apple around this level here, and I sold it around this, if I remember correctly. It actually pulled back a little bit more, and then this was earnings, and you can see how major impact earnings can have. And we had this huge move over here, and then we just sold off right after that. So even though Apple was a strong stock, you are gonna have sell off, some pullbacks. That's a given. Apple still has not made a higher high, in my opinion. Right now, if you look at the bigger picture, I mean, let's take a look at the weekly chart of Apple. I mean, this is the bigger picture of Apple, and this is actually a pretty clean picture in my opinion. You have this down move, and then what do you have? Same like the SPY, we have this bearish consolidation pattern. So if we close above this, the Apple high, which just so happens to be the absolute high for Apple, if we close above there, then this negates the pattern, and we should shoot through the stars. I mean, 700 would not be out of the question. Okay, but I do think Apple, according to what I'm seeing, and it's not what I think, it's what the charts are telling me. It's the charts are telling me right now this is creating a long-term bearish pattern, and we could possibly test this 50 moving average on the weekly chart. Okay. Alright, this is a chart of the FCX. I missed this trade at the 3606 level. I really thought it would hit this 3635 level, but unfortunately it didn't get there before it started selling off. But you can see how accurate this 3606 level was. I think the high of this candle was 36 flat, so it's about 6 cents off. We are going to have some support here, which is the 50 moving average, the 20 moving average, and this gap fill all in one place. In fact, it pretty much came close to it already, so we may actually get a bounce as early as tomorrow, or at least a sell off into these two moving averages here. In my opinion, though, the next trade that I'll take, again, once a level is already hit, I wait for the next level, which is the 3801 or the $38 level, and then I'll take another short at that level there. Right now, this could possibly be a bullish consolidation pattern before shooting back up to the next calculated level. Again, if this is truly a bullish consolidation or a bull flag or whatever you want to call it, then we will easily break through this upper trend line here. Okay, this trend line was used and abused 1, 2, 3 times already. 4 times, it might actually break through on the 5th time. But you know, if I mean, and that's only based on this support line here. If we close below this support line over here, then I'm thinking the FCX will probably retest this bottom trend line here before going higher. But you know, I really want to short the FCX, so I'm hoping that we can get up to this 38. I think it was 38. I'm sorry, this yeah, 3801 level here, because I have multiple indications that we should get a pullback at least on the FCX. And again, the FCX is definitely in a downtrend, and I want to go with the trend. So if I short the FCX and the FCX goes against me, it shouldn't be too bad because you know, it's currently in a downtrend. Okay. Last but not least, we do have the GLD, which is the ETF that tracks gold. Let me load my drawings here. Okay, my drawings are already loaded. All right, so I had a couple levels up here, which is the 160 level and the 200 moving average. I don't know if we actually get there after we broke out of this upper trend line here. I said if we close above this, the high of this candle here, then that should confirm the breakout. Obviously, we did not confirm it, so we broke down. We had some resistance. I'm sorry, some support at this 200. These two moving averages here. I did have a calculation here at this 153.38 level. We obviously got a bounce off of that today. So these levels are still holding up. But again, once it gets hit, it's no longer valid in my opinion. I just leave it here because you know, support will turn into resistance and resistance will turn to support. My next level before I expect a bounce is the 148.80, and if it never gets there, okay, here's the thing with these levels that I have. If it never gets there, then I never take the trade and I never lose money. But if it does get to these levels and it's putting the odds in my favor, and that's when I normally take the trade based on the intraday play. Okay, so in any case, I'm pretty much out of time. This is your 7 minute market update. God bless to you all. You know, thank you very much for stopping by and watching my videos. It's just basically not a recommendation. It's just obviously my opinion. And you know, if you guys have any questions, or you guys want me to take a look at any stocks that you guys are interested in, you know, feel free to post it, and you know, I'll take a look at it and see if my calculations will, you know, hold up for the stocks that you're looking at. Okay. I do not play with penny stocks though. I've been burned you know, one too many times with penny stocks. Sometimes it's a winner, sometimes it's a loser, but you know, more than likely if you're playing with penny stocks, you're playing with a higher risk, and I really don't like to play high risk. I've been burned way too many times in my cowboy days to know that, you know, being patient and having discipline is probably the best thing you can do in you know, in a career like you know, being a trader. Okay, and it may not even be a career, a hobby, or whatever it is, but as a trader, you just want to be careful, and you know, capital preservation is key, you know, and then that's why your stop outs are very important. Okay, so in any case, thank you very much for watching this video, and I hope to see you in the